Good evening or good morning, everyone. Stocks on Thursday had a pretty ugly session overall, but in the grand scheme of things, if we have to be very objective, it isn't terrible just yet. As you can see on the NYSE, starting it off there, down 1.13%. Volumes heavier than the day before. Technical distribution day, second one in 3 days. And that kind of goes back to this session, which now kind of looks like that was possibly churning. So now we got one churning day, one sell-off, and another sell-off. Possibly looks like we're churning overall in this area here in the NYSE. So some caution has to be, exercised here. And I know that we just recently got a lot of long signals, though. What are we going to do about all those? Well, we're going to cut our losses when we have to, which is what I've been doing. But when you're going to have violent V-shapes rally, don't forget, this is one of the most volatile ever, top to bottom to top moves in 1 quarter ever in the Dow Jones Industrial Average, and since 1933 on the S&P 500. When you have those kind of moves, it's going to take a while for stocks to set up, and then by the time they do set up and break out, when you have an overall overbought market, they're going to fail a lot. Some are going to work, and overall today, to be honest with you, my holdings did very well, but there were enough stocks to annoy me that didn't move higher, but not all of them completely failed. But let's go ahead and just keep on moving on just for a second. The S&P 500, as you can see here, also a down day, appears to be churning, but once again, volume is below average. There is no serious pickup. The SPY also confirms it. While it's not perfect, at least it's not terrible. Like if volume would have been above average across the board today, including in the index ETFs, then I think, well, oh my God, like, wow, we're going to fail this thing already. But as of now, technically this thing can pull back to the 50-day moving average and still be healthy as long as it found support anywhere between the 200-day moving average and 50. So it's not that bad. NASDAQ's volume, on the other hand, jumped quite a bit, but we're still holding even just the most recent lows here since our very strong session back on April 1st. So it's kind of hard to be like, oh, well, let's run for the hills just yet. It's not great, but at the same time, it's not terrible yet. We've had a quite big move. It would make sense to move sideways, but we're starting to run out of that bullish time of the year from March to May, so we've only got one more month, to do or into May if it wants to really get going throughout the summer months. We got to see a stronger market. And then also the Russell 2000 weekday down 1.4%. Just really quick looking at the Dow Jones Transportation Average, another weak session. It's kind of been leading to the downside. Dow Jones Industrial Average, same thing. Even had volume lower on the session. And then if we go look at the Diamond, you can see lower than below average volume. And on the IWM, also below average volume. So far, all the pullbacks are orderly. Nothing to freak out about yet. But the thing that keeps sticking out in my mind, I've already believe that I'm going to need to start making adjustments where I only go long stocks where the price is touching the 10 and 20-day moving in size. Price has got to be touching the 10 and 20-day moving average, or the 20-day moving average at least has got to be extremely close. The 50 and 200-day moving average can't be extended by more than the 50-day moving average can't be extended by more than 2 times. The 200-day moving average probably is going to have to be like 3 times, but I'm going to have to start seeing the 50 and 200 days closer to the price, and the 10 and 20s, the price making that pocket pivot point signal off of it, because the hot charts that should be following through immediately just aren't. So PZE is technically not even a 50% sell on an end-of-day basis, but this damn thing ripped through a third of my stops here at 637 low a day, and another third of them here below 622. My final stop is back here somewhere. It's either that low or this low, trying to give it some room because how volatile it is. But the mere fact that this stock can set up in this kind of pattern, get this kind of accumulation, 1, 2, 3, and on a fourth day have that kind of a fourth day in a row pocket pivot point signal with a huge volume surge within the overall base with Max Green Bot. The fact that this doesn't immediately follow through the next day, breaking out like higher, producing like a 5% plus gain, it's a huge red flag. And then to be down another day, and then you have today's session finally. This just tells you that you're just still quite not in that super bullish market environment. So it's really silly to be completely extremely bullish here. And this is only one of the 2 perfect setups right now. And Graham's not really perfect, but it's about as damn close as we're going to get in a tape that's this V-shaped. If this tape doesn't move sideways in a more orderly fashion, you're not going to get more charts that look like this. But once again, following this huge volume surge with Bob going back to Max Green and the pocket pivot point signal, The first day that we're up, we reverse off the intraday highs. Red flag. We should be up huge immediately. And of course, now we're pulling backs. And of course, we got to now raise our stops. My first stop goes to 381, and I'll keep my final one down here. But the point is, this is not how these beautiful patterns, whenever they make their breakout moves, should act. Graham and PZE both made their same moves, both their moves on the same day. That's even more confirmation. They should have exploded out the gate. So big problem. So we need more time to consolidate the gains. I'm okay with the pullback so far, especially when I have a lot of long positions that look good. What doesn't look good? AGRO on an end-of-day basis finally is giving a full sell signal. I'm already out. CHFC has failed, a rollover. I don't care about the volume there. We got to cut our losses. And Coors, perfect speculator name, failed its support as the retail stocks really just got hammered today. And also Fran is a full sell on an end-of-day basis as it's failed its 50-day moving average. Wasn't a huge position anyway, but I tell you what, once again, you have this much accumulation in a row. I know it's been up a lot of days. At worst, it should have just moved sideways, held the 50-day moving average. There's no way Fran should have failed at 50. And then DG, it's a little bit more technical, but it's closing below the 20-day moving average. It's technically a 50% sell signal. I'm still using this level as my final cut loss in intraday. I got hit, so I'm completely out of DG. ECH, it hit 50% of my sell stops, and on an end-of-day basis, it's a 50% sell. Ruth is technically a 50% sell because volume is heavier today, and it just has not acted right since breaking out. And once again, goes back to my point of buying stocks that are overall extended from their 50, 200-day moving average. While the stock was on its 10 and 20, overall, you can see in its uptrend, if it was going to move higher, it needed to just continue immediately. And so the fact that it just rolls this over, sorry, there's a police vehicle that just went by my place. And you can see here it is failing the 20-day moving average, not shown here, but let's put it up, on higher volume the day before. So that's why it's a 50% sell. Then there's S&E. S&E is closing below the low day of the signal date the day before, so it's a 50% sell. Kate is also a 50% sell with it closing below the 20-day moving average. And PACW is a 50% sell with it confirming a close below the 20-day moving average following the earlier lower volume. So a lot of sells tonight. But the worst one was EBIX, this damn stock. So I'm totally done with it. Could care less about it. Could reverse and hit new highs, and I'm over it. So initially, EBIX, we started to go long here, these two sessions. And once again, with this kind of pattern, once again, that 50 and 200-day moving average is far away. And you can see the 20-day moving average never even touched price along this timeline whenever it was breaking out here. So just a small red flags. But, you know, I really thought whenever I looked at this longer term base that if this thing was going to break out and like put in a huge move, this would be it. It did not immediately, and instead knocked me out of my position. But I put it back on with a breakout above the most recent highs, and it decided to do that on April the 4th. And so on April the 4th, I was taken back into EBIX, making my sell stop the 4-1 low. A few days later, I was knocked out actually the very next day, right? Because 39.25, and it hit 39.24. So actually it was kind of a small blessing. So yesterday, it hit 1 cent underneath the low of the day of that session. So my buy stop that triggered the very next day, 2 days later, I was knocked out of it. So I was like, thanks a lot, EBIX. And then after today, I've been knocked out of my entire position. So EBIX on my end's a 100% sell, but really it's just closing below the 20-day moving average. And on the closing basis, it's still holding this support level here. So for now, you can technically still hold on to it. I just personally wouldn't. So those are all the sells. I know there's a lot of them, but we have a lot of long positions once again because these charts aren't working, PZE Graham. And if you think that you can nail the PRAH, which I have a large position in, and FPRX, which I also have a large position in, if you think you can know for a fact that those are the stocks you can go after on an end-of-day basis, for those of you that cannot follow the market 24/7 because I'm still not becoming a full-time slave to the 3:30 in the morning, or really to wake up early be like 2:30 in the morning to 10 a.m. lifestyle, it's going to be very hard. It's just not the right kind of tape overall for the market. It's all about how we pull back here. We hold the 50 and especially these March lows, and we start to move higher, and we have a lot of nice patterns and breakouts. I think we have a good chance to run higher.